Okay, we'll just give it one more minute for everybody else to join back. Okay. Sahid, are you back in? Because since this was your question, I want to make sure you're in before I continue.
Yes, I'm in.
Okay, so as the market was going against me, I readjusted my downside risk. I resold the $825 contract to give myself a little bit of breathing room because I thought that 840 may not survive. So 825 allowed me. So I sold the 825 contract for $27. The reason I picked eight for $27 premium is because 825 plus $27 is the exact what I paid for, $852. So if Tesla doesn't close below 825, I get to walk away with this $300 and I had a little bit more breathing room. So that's called rolling down. This is just one example of rolling down. So rolling down and rolling up means you are giving yourself breathing room. Either you sold puts, for example, let's say you decided, and this happened to me on Apple, on Friday, market started dropping. I had $128 strike price puts. So what I was hoping, $128 puts on Apple, I sold on Wednesday and I received 70 cents for it. Okay, at this point, Apple was trading right up here, about 130, 131. I was pretty confident that they were going to hold $128. I was wrong, guys. I was absolutely wrong. So this trade started going against me. This 70 cents contract that I sold was worth $1.10. That means I would take a loss of 40 cents. Okay. Instead, what I did is I rolled down my contract. All it means is a fancy way of saying you are giving yourself a little bit more breathing room. So I bought back my contract, bought my Apple contract back for $1.10. I took the 40 cents loss. Okay, here we go. I took the 40-cent loss. At the same time, I sold $125 strike put for 45 cents. So if Apple doesn't go below 125, I get to keep 5 cents. So I was okay with it. I didn't want to get 5 contracts of Apple assigned to me. That means I would have had to put up $64,000 to buy $500 shares of Apple, 500 shares of Apple. I didn't want to be in Apple. I just wanted to make money on the options. So this is what I did. I rolled down my contract. I took my 40-cent loss. And then at the same time, I sold a 45 put to make up the difference of 5 cents. So you should always be managing your trade if you are either long calls or short calls. And you can even do that with the long calls. So this is called rolling up. What it means is, let's say you bought Apple right here. Okay, Sahid, with me so far?
Quick question before we go to the other scenario.
Yeah.
I want to revisit the Tesla scenario you had.
Yes.
So my the one above that, the Tesla one that you did, when the strike price, I mean, you had 840 and the price of the stock coming down, usually the call premium also comes down, right?
That's correct. So that's when
how can you make a 300 profit on that?
Oh, good. So that's strike for 840. What happened was Tesla at that point was trading at 846. Okay, this is the actual price I'm telling you. It was trading at 846. So this call that I sold for 840 strike price call for $20, I bought it back for $17. So this was a covered call. So what I did is, as soon as I bought 100 shares of Tesla for $85,200, I sold this $20 call. But when the Tesla started dropping and it was at 846, and I thought there was a possibility of it dropping some more, I bought back this call for $17, locked in my $300 profit. At the same time, I sold the 825 call for Friday and collected $27 premium. So 825 plus 27 is 852. So if the Tesla shares goes away, I get my money back. and I get to keep the $300. So instead of my break even being at 840, I gave myself $15 extra. I gave myself a little bit more breathing room. Here, initial trade, I would have made $800. Initial trade, I would have made $800. The way I would have made $800 is bought Tesla for 852, sold at 840 strike, plus $20 premium.
Yep.
Okay. But Tesla did not go up. It started going down, and I wanted to give myself a breathing room. So that's what I did. I sold my call. Okay, with me?
Oh yeah. So basically, your plan didn't work out. So at least you are protecting your
Yes,
trade.
I wanted to give myself breathing room. I'm okay making less money. It's okay to make less money or no money on a trade. What you don't want to do is you don't want to lose money. Same thing happened with the Apple trade. 2 days ago, I was very bullish on Apple. I said, hey, this is going to break out. I'm okay, comfortable selling this $128 puts. Guess what? Apple had different plan. So what am I just going to sit there and take it on the chin? No. What I did is I took the 40-cent loss, but at the same time, I said, I will give myself a little bit more breathing room. I'd rather get assigned Apple by taking 40-cent loss. Instead of buying Apple at 128, I am going to buy Apple at 125. So that's $3 I'm going to save by doing that, right? $3 on a 500, that's $1,500 extra I'm going to save. In case Apple went to 120, I would have no choice but to buy it at 125. But if it went to 120, I would still have to buy Apple at 128, right? So I managed the trade.
Can you, I mean, right now you are reducing your strike price. Can we add days to it? I mean, instead of selling the same expiration date rather than that, that way we can delay it, right?
Yes, you are absolutely right, Harry. Or is it Harry? Harry's asking the question.
This is Sudhir.
Sudhir, okay. Sudhir, you're absolutely right. I could have sold, I could have sold a 125 call, $1.31. But remember, Apple has earnings next week coming up, right? On the 27th. So I don't like to be around earnings or if the market is more volatile, but you're 100% right. I could have jumped from taken that 5-cent loss and then sold a 120 puts to give myself extra $6-7 for next week. So I'm hoping by next week, if Apple doesn't drop to below 120, I get to walk away from the trade break even, or I could have done 140, the 121 one at 46 cents, and I could have walked away with 6 cents. So I gave myself, instead of $5, $3 breathing room, I gave myself $6 breathing room by selling a difference. So this is called rolling. You're correct. You can roll up in a weekly, in a time frame. You can also roll up in the same week. I prefer to do it in same week because then I'm managing the trade actively. I don't know what's going to happen next week. I don't have the foresight. But what I am confident is Apple's not going to drop to 125 or below because there's plenty of support there. I could be wrong. Something terrible news could come out from Apple and this could drop, but I would have to buy at 825. So in that situation, I would still roll it down further by going out even further weeks or months and going down with like $2-3, right? At some point, you're gonna either have to make a little bit of money or take a little bit of loss and walk away from the trade. You don't want to keep rolling it. I am not a big fan of rolling it more than once or twice. The only reason is that means I got the trade wrong. You have to say, I got it wrong. I am okay to walk away with little loss. Okay, or break even. You don't want to have a big loss. You want to take a little bit of loss, walk away. Because remember, options market is all 50-50. There is no, we are doing all this analysis, chart analysis, and we're hoping trends are working in our favor. At the end of the day, it's a coin toss. But we are hoping through all this technical analysis, support, resistance, some news, we are putting odds in our favor. And if they don't work out, I don't want to lose money. I don't want to lose 40 cents. I would rather instead of making 40 cents, I was hoping to make 70 cents on this trade initially. Okay, I was hoping to make 70 cents in 3 days. I didn't make 70 cents. I made 5 cents. I am okay with making 5 cents. I didn't. Okay.
Yeah, one more question. Is there any reason why you did Tesla covered call rather than a put?
Oh, no, I just had some cash sitting in my account. And I was hoping Tesla would break out, and it was just a little bit more easier to do it. But you're 100% right. I could have done 840 covered call, I'm sorry, cash
Put.
secured put for $10, and it would have given me the same result.
Same
And
result.
I would have had to roll it down as well. So I would have had to taken $300 loss. Yes, there's a lot of ways to do it. In this instance, I wanted to do a covered call because I was hoping that instead of buying 100 shares, I bought 101 shares. Why did I do covered call? Great question. I bought 101 shares of Tesla, and I was hoping it would go away. 100 shares would go away. It would close above 840, and I get to keep one share, which was my profit, right? Because my profit was $800. Okay, guys, remember I talk about free shares. I want to create free shares. I want market to say, here you go, the mill. Here's 5 free shares. Here's 10 free shares. And before you know it, you have like 30, 40 good companies, 10, 20 shares here that's starting to grow and paying dividends. And you don't have to work as hard. You don't have to keep trading in and out. Okay, so all right. So there, I think we. Any follow-up question, guys? Any other new questions? I know.
I have 2 questions on this one.
Yeah.
One is that first of all, this rollover option, we don't see it in the normal buy, sell, call, puts, and everything else which we do on Robinhood or any other thing.
Yeah, you will not.
Is it only enabled on certain platforms or
no?
Certain
This rolling over means okay. So if I wanted to, so on my interactive broker, I have a right click and I say roll it over. Okay. Here, let me see if I have any trades open. This is just one of my IRA account. No, I don't have any options here. It's just some tickers. But here, rolling over means you're closing one and you're buying another. So you would just normally, you would say buy single. Let's see if there's any rollover options here. No, nothing. And then you would go and buy another one to kind of offset each other.
Understood. Okay.
Okay. Yeah, it's platform to platform is different. My interactive brokers, which I'm mainly using for trading, I have one click because it's designed more for institutional people. I just right click, roll over, and then I pick the price and it gets rolled over. So
understood.
Okay.
One last question on that chart which you were showing for Apple, for example.
Yeah.
You said that it had plenty of support at 125.
Yes.
Now, what indication do you get on that graph? It says that, okay, you have a support at 125.
Great question. So support or resistance, it's always at round numbers, okay? And half round numbers. This is just the fact of the market, okay? So you will always get support at 5s, 10s, 15s, 20s. And then you'll get big support or resistance at 50s, 100s, okay? Always remember the round numbers are the toughest to beat. If you look at the chart, it came to 140, never crossed it. 140 was tough for Apple, okay? Down here, it came down to 112, which is close to 110. It never broke below it. Here, at 125, this see right here, it's 125 struggled, and then it jumped above and it just shot up, and then it never looked back. So support and resistance is where a price action happens a lot around, and then it revisits it. It revisited down, and then it shot up. So I know that there's a good enough support at 125, because round numbers is always, you'll have good support. 125, 120, 115, even bigger support at 100, bigger resistance at 150. Apple will have tough time breaking above 150. But once it does, and it could happen in a month, it could happen in a year. But when it does, you expect it to run up. Same right here. $80 was the biggest resistance for Apple. It fought back and forth, back and forth. Let me see if I can zoom in a little bit. So round numbers, guys. Remember, always you'll get some sort of support or resistance at round numbers. 50s, 100s, 200s, those are all good numbers. 75s are good. 5s and 10s are always good. So you'll see that $80, it just went back and forth, and just got rejected, right? And then it came down to $50, and you knew $50 is a good price for Apple. This is, again, post-split, so it's hard to judge, but $50 is always. So great question. You can also look at some chart, and you'll see you can draw a straight line. And as long as you're hitting a lot of pricing points, rejection or support, you can briefly determine that, hey, you'll get some support here. So Apple has a good support at 125 here, right here. Let's take a look. Let's see this line right there. You see how it got rejected above? 125 right here. And then when it broke above it, it never looked back. So you know that this resistance turns into support. So let's put that down. Resistance, once broken, is support. And support, once broken, is resistance, always. So if Apple is breaking down and it cannot go below a certain price, and if it breaks down below, like here at 112, then this will become tough for Apple. A number will become tough for it to break above. So support becomes resistance once broken, and vice versa.
Perfect. Thank you.
Okay, no problem. All right, guys. Any other questions, tickers, trades? We're coming up on 1 hour. Harry, did you want to add anything?
Hey, how's it going, guys? Can you hear me?
Yep.
Yeah, Harry, we can hear you. Do you want me to make you a host? You want to share any screen real quick?
Not yet, unless
Okay.
anyone has anything specific. So we were talking about those debit creds and credit spreads earlier. Just remember this. If you're the one getting the money, you're the one that's assuming the risk, right? So debit spread, where you pay the money, the max you lose is whatever you pay. And the max you can gain is usually the difference between the two strikes. On a credit spread, you're getting paid, so you're going to end up taking the resistance.
Okay, I'm gonna go over what Harry said. Harry, excellent point. Excellent point. I'm gonna go over that with everybody in just a moment. Okay, so what? Let's say you buy a debit spread. Whatever you are paying is your max risk. Okay, credit spread. Whatever you are getting, so you're getting, let's say $5, and the spread, the spread or the vertical, the strike, the difference between strikes is $10. Okay, so let's say you're buying something for a vertical for 100/110. Okay, so the maximum you can lose is $10 minus $5 because you already got paid $5 up front. Okay, so max risk is $5. Max profit is $5. Okay, and then debit spread, whatever you're paying is your max risk, and max profit is difference between strike minus debit paid. So
make that price $3.
yeah, that might be better. Okay, let's say if you got $3 here, and let's update that. So your max risk on a credit spread is $7, and max profit is $3, because this is what you paid. Credit spread, whatever you're getting, is your max profit. Max profit. Debit spread, same scenario. $3 is what you're paying, and the spread is $10. So $10 minus 3 equals 7, and that's your max profit is $7. Max risk is $3. Okay, guys. Thank you, Harry. That was a very good point. Great point. Guys, we have time for one more question. I want to keep it short. I know it's been going on about an hour. Feel free, jump in. Any questions? No questions are silly. Everybody's thinking it.
So how do you calculate the return on these verticals? I mean, you calculate the...
Yes, great question. So how do you calculate return? Return is very simple. Okay, profit/loss divide by risk taken. Okay, if you're taking $5 risk, and you made $5 risk and you made $1, you made 20%. You lost $1, you lost 20%, made 20%, right? So if I'm taking on $1,000 risk and I'm making $300, I made 30%. If I am losing $3, I'm losing 30%. It's just profit divided by risk taken.
Don't they take any money from us? I mean, because of these options like margin, like...
Yeah, they just hold on to it, right? So let's say I put up a vertical, they will hold on to $1,000 if I'm doing a credit spread. So here, let's do a credit spread on Apple. Okay, let's do this for next week. Okay, let's do a vertical, which is credit spread on Apple. And I'm saying Apple won't go below 120, and I'm willing to bet maximum is they're going to give me 23 cents for it. Okay. All right. So I'm going to make max profit is $23. Maximum I could lose is $477. And they're going to hold on to it. Buying power would be the $500. Okay.
Okay.
But when you close the trade, that $500 margin that you put up comes back to you, whether profit or
Yeah.
loss, that's up to you. So if you have to buy this back for $50, you're only going to get $450 back from your margin.
Okay.
Okay.
That is
If
very
I,
nice.
instead of doing just this, if I just did a single put for Apple at 26 cents, watch how much it's going to cost me. It's going to cost me almost $11,964
Oh,
in margin.
okay.
Okay.
Yeah. So
So
it's
that's why
11 cents.
verticals are better. It allows you to put on, and they're also slow moving. So you have some time. You can't, it doesn't surprise
Okay.
you. You know exactly if you're messing up on a trade or if it's going in your favor. All right, guys. One more question,
Okay.
guys. Last question for the day.
चिट्टियों के बारे में, butterfly.
Butterfly. Oh, Rohit bhai, I think we're going to have to do another session because butterfly will just like fry everybody's brain. We're just still learning verticals. So butterfly would be, let's do another session when we're all confident with verticals, or we're all confident with calls and puts, and we're confident with rolling. So because butterfly is just by itself, you can spend a whole day. I can spend a whole day on butterflies, So, okay. All right. Any other question, guys? Last question. Thank you all. I see like almost 12, 14 people join.
Nice.
Any ticker you want to take a look at? You want to know what my thought process is in analyzing support, resistance, how I say, hey, something's going to fall, something's going to go up.
Yeah, Dumel, this AC, I think that'd be good. I don't know what you use. Do you use...
Okay.
Is all that available on the Ameritrade screens, or is it something that you...
Yeah, no, this is nothing proprietary. I don't do anything proprietary. There's nothing there. Are a few algorithms and stuff that I've done myself that kind of gives me indicators. But again, this is nothing. Everything is supply and demand. Okay.
Right.
Everything is buyers and sellers.
Yeah.
Charts.
So typically what I like to do is if I'm selling a put or something, I like to look at the RSI.
RSI is good.
The MACD. So I just looked at it just to see if it's overbought or oversold, and if there is any convergence divergence going on. And I know that some people use Fibonacci retracements.
Yes. I used to do
all
all
that. I don't know if all that is available in Ameritrade, because
here, add a study here, add a drawing, and I can do a Fibonacci retracement. I can do channels. I can do regression lines. I can add
Is it just a right click on it? And
right click, add a drawing, and then here they have so many studies available. It will give you they have all the RSI, all studies right here. You can add, like, let's say, what was it, MACD you mentioned?
Yeah.
Okay. MACD, it's a good way to kind of see what the divergence and convergence on that is. Like if the prices are going up, there's also accumulation. And so the charts, so I will tell you this thing, you can overanalyze the trade to death. And there's something called analysis paralysis. More you analyze, more you will, but all you have to do is look at a chart. The chart tells you a story. Okay. Let's take a look at Apple chart. Let me snipe it so I can do a little bit of coloring on it.
So do you typically look at, so you're looking at 1 year. So do you look at the yearly? Do you look at days? Do you look at
daily?
The last 12 hours?
Daily depends. If I'm trading, I'm scalping or anything like that, I go on a shorter time frame, right? I'm going to like, I prefer tick time over daily time. Okay, what happened to my chart? No. Okay, I'm gonna have to fix it. I don't know what happened. Let's take a look at this side. Apple. Okay. And let's look at daily. Okay. So whenever I'm looking at charts, if I'm looking for support and resistance areas to buy and areas to sell, I look at daily charts. The daily charts will tell you a story a lot more. So this is your candlestick. The bottom price is always the open. The top price is always the close. Or if it's green, okay, guys, sorry. I meant to say if it's green, bottom price is open, top price is closed. If it's a down day, then the top price is the open, and the bottom price is the close, okay? The chart tells you the story. The chart here tells me that the Apple went up right here, and the sellers came in and pushed it down. Apple went down, sellers or buyers came in and pushed it up. Here, this is a very bearish chart for Apple. Apple opened right here, tried to go up. Market says, no, sir, we're not going to let you go up. Went down, and it actually closed at the lowest point. And we know that there is a little bit of support at 126. If this gets broken, we're looking at 125 for Apple and below, okay? But that doesn't mean you just, based on that, I'm going to trade. I'm not going to trade based on that, okay? All right, let's get all that stuff off. But I just look at chart. A clean chart will tell you a lot more than having extra indicators. And indicators are a great way, and I can do a whole session on just indicators. I used to have my charts. It looked like I'm flying a Boeing A380, I'm sorry, Airbus A380 or Boeing 777. It had so many colors and lights, and I mean, it was just insane. It would blow your mind. And what used to happen is you get into something called analysis paralysis, where you're just analyzing everything to death, because there's sometimes indicators like MACD and RSI will give you contracting information. So what do? You can't take a trade on it. You cannot make a decision on it. So I look at support and resistance, and I look at charts. And over time, you will also develop a habit of telling a story. You want to tell a story. Look at the chart and ask yourself, what is market telling me? What is this chart telling me? If it's telling me, hey, there are buyers coming in. Here, Apple started going up, came down, going up, came down, going up, came down. That's telling me that every time it comes down, there are buyers, people wanting to buy it because they missed out buying here. They're saying, oh, let's buy Apple at 114. Oh, wait, we missed out at 125. Let's buy it at 120. We missed out at 130. Let's buy it at 123. So the market, always ask yourself, what is the market telling you? It's telling you a story. The buyers and sellers are telling you a story. And if you can just figure it out, what the market's trying to tell you, you got it. You got your support resistance, you got your trend, you can start predicting where the prices are going with a good confidence level. Okay, guys.
I see that probability calculator. Do you trust that, or
yes,
in Fidelity?
Well,
I'm not checking all the other parameters here. I just go and check.
Yes. Probability calculator is all based on math. Market is all based on math. This is for options. Probability calculators are used for options. So yes, it works. I trust it. Something that tells me that a 20% probability of working in my favor. Excuse me. I know that if I put up 5 trades, there's a very good chance that it's gonna be one out of 5.
What is typically the probability of assignment that you're willing to work with when you sell a put?
When I sell a put, I'm always at 20 delta. Okay, guys, my favorite number is always 20 delta. Delta means 20% of chance for the price to go below it. So let's say I want to sell Apple and I'm bullish on Apple. I will sell 122 put. And let's go to today. Unfortunately, market's closed, but why is it? Okay, let's reset the probability.
So don't you look at the probability of assignment?
Yes, I do. And that is your delta. Your delta tells you.
Actually, I thought there was another field that shows you the percentage itself, like 30% or so.
Yes, no, this is the delta is your probability of assignment. Okay.
In the app, right? In the Thinkorswim app, there is a probability of profit that it gives you. But I second what Sunil said, right? Is if you're looking at delta of 0.2 or a probability of profit.
Probability ITM.
Okay, so here you go.
Let's keep that 20, which means it's 80% in your favor.
Okay, let's do probability out of money. Again, 1 minus probability out of money. So look, 122, which had a probability of 19%, is telling me that is a probability of out of money 81%, correct? And that's the same as your delta. It's a quick way to just take a look at it and say, okay, I have a 20% chance or 19% chance for Apple to go below $122. I will tell you this much. I will take this trade. If I want to accumulate some shares of Apple and I don't want to buy it $127, I'll go sell put, cash secured put for Apple, which gives me, I always look at 20 delta because that's my favorite thing. It has worked for me. Don't ask me why. I can't explain it to you, but I like the odds where if I'm playing 5 times, I'm winning 4 times and I'm losing 1 time. And then that time that I'm losing, I can roll down and possibly go break even. So technically, on a lot of puts that I sell, I am getting assigned 1 out of roughly 9 times. So that's about 12% where I'm getting assigned. Even though I'm going with 20 delta, I am managing the risk. I manage the risk on Apple trade, as we talked about. I manage the risk on Tesla trade, as I talked about. There were a few other trades. I had a NEO puts that I sold. Oh boy, NEO did a number on me, okay? NEO, I was bullish. Wednesday, I sold $57 puts, started dropping. I rolled it down. I was able to walk away with this very small profit. It was not a great week for me because market pulled back. It didn't do what I wanted it expected to do. Did I lose money this week? Absolutely not. I do not want to lose money. I want to walk away with break even or a small profit or a great week. Okay. So these are some of the puts that I sold that I'm just 3 of them that I'm talking about, but I was able to roll them down or get out of it at break even and just get my money back.
So Dumil, typically, how far out do you write your puts?
I like weeklies. I like 2 weeks out, but I don't go anything further. It's very rare. Like there are some stocks that only trade monthly, right? Like this one right here, Avaya. It's been one of my favorite long-term accumulation stock. Again, guys, I'm not recommending it. Don't go out, buy it on Tuesday and load up the boat, please. It's at $20 in my fundamental analysis. I think this is worth at least $30, okay? So I'm writing covered puts at $20. Well, I don't prefer $20. I prefer $17.50. That means this is 20 delta again. I'm selling 1 month out puts on Avaya at 17.5. I'm comfortable owning the shares at 17.5. Same thing with IPOE. I own 1,000 shares. I want to own another 1,000 shares. 1 month out, I'm selling like cash secured put at 17.5, and I'm selling a little bit at 30 cents at $15 in case it pulls back more. Right? I like to get paid.
So IPOE, what are you selling those at?
17.5 and $15.
Okay.
Because I'm comfortable on this. On this one, I also did a little bit more complicated trades. I did something called long synthetic. I don't want to touch it. I don't want to go over it because it will just complicate situations for everybody. So, but when you're bullish on a trade, you can take advantage of it, right? Like on IPOE on Wednesday, I talked about how I am seeing this U formation happening. And I said, okay, it's ready to pop. And that's kind of what happened. Unfortunately, I asked the question, will it hold? It didn't hold the 21 level. Let's see if we'll try again on Tuesday and break above $22, continue to run up to 25. If it doesn't, I'm comfortable holding it at 17.5 or $15. Okay. I have accumulated almost 300 free shares for IPOE. So for me, it doesn't matter. I'm going to hold on to my free shares till this company goes 5 years out. I like the company. Again, not a recommendation, guys, to go out and buy IPOE. I'm just telling you my thought process. Okay. Last question, guys. Oh, no, wait, that was the last question. Harry, did you want to add anything?
No, I'm good. If there's still questions, let us know. Give us a heads up and we'll do another one of these sessions next time.
Okay.
Hey, thanks a lot, guys.
Yeah,
thank you, guys. No worries. And feel free, if something's not clear, message me, ping me. I will try to get back to you. No problem. We're here to help, learn, and don't hesitate. Run the trade by the group. If you get stuck in a position, don't feel that you're trading by yourself. Just say, hey, look, I'm stuck in this position. What do I do? We'll come up with a solution, or we'll at least tell you like, hey man, this is not going to work for you. Take a loss, call it a day, or this is what you might do to mitigate some of the risk. It's all about mitigating risk in your portfolio. It's not trying to hit home runs. It's trying to make money or break even or having fun at the same time. Thank you all for participating. I mean, I really appreciate it. I know it was a short notice and short call, and thank you, Harry, for all your help. You guys enjoy your weekend. No market tomorrow. No market tomorrow. Okay. So sleep in. I know a lot of you are still working tomorrow, right?
Yeah.
Nobody has Martin Luther King Day off, huh?
Unfortunately, not.
Okay. All right. Let's get back to some NFL and India betting, or hopefully winning. Okay, guys. Thank you. Have a good night.
Thanks for all the help.
Thank you.
Okay.
All right. Thanks to Mel and Harry
Okay,
and
thank you
everyone.
so much.
Thank you.
Bye-bye.
Thank you.